Welcome back, cool cats. Tonight we're skipping the intro and jumping right into the market analysis. Let's try to predict future market movements on SPY, QQQ, IWM, TLT, and more. As always, nothing I say is financial advice, and you should always consult a licensed financial advisor before making any financial decisions. On Friday, SPY got very close to the upper main red resistance line here, around 612, and it almost touched the upper resistance line of the descending channel here in yellow, around 609.18. If it continues back down, it's likely going to retest the previous resistance line of this descending channel in light green that it broke out of, probably around 595, which is also confluent with this key level right here. If we somehow manage to come all the way back down to this main support line in light blue, somewhere around like 590, I have to wonder if it's going to break or once again act as strong support, sending the market back up to retest the red resistance line somewhere around 612 to 613. As I've been saying for months now, volatility is likely to tick up significantly this year. Keep in mind that any level can eventually be broken, and the more that we hit these key levels over and over again, it's weakening them, which is going to break first. And I've covered it in my previous videos, but I'm probably going to revisit just how far SPY could actually fall if this multi-year rising wedge actually finally plays out. Quickly throwing up the Ichimoku cloud, you can see how price touched the Ichimoku cloud support right around this 600 even level, which also is a key psychological level, and we could potentially see a bounce off of that. Taking a look at QQQ on the 4-hour, the previous resistance line of this descending channel in light green is right around 517 to 518, and I wouldn't be surprised if we retest that. Notice how we've got this lower ascending support line here in yellow and this upper descending resistance line here in yellow, and how they converge forms a symmetrical triangle. Now, if this is a valid symmetrical triangle, we actually can take a measured move from here to here and see what the likely breakout or breakdown targets are. And if this little wick above resistance was a false breakout, we actually may see it followed through by the real move, which often happens with symmetrical triangles. So the measured move shows basically a breakout or breakdown of about 30 points. So either about 485 to the downside or about 559 to the upside, depending on where it actually breaks out from. Now I want you to keep in mind, if it breaks downward, it would take us down to this main support line of this multi-year bullish channel, somewhere around 490 to 494, which actually lines up with the support line of this descending channel in light green. Or if it actually does break to the upside, it's very likely to retest this previous support line of this multi-month ascending channel in dark blue, which potentially could act as new resistance. And I know it looks messy, but I'm throwing up all the indicators. We've got the 200 simple moving average here on the 4-hour time frame, right about 520, confluent with the Ichimoku cloud support and near the lower Bollinger Band. So there's a lot of confluence to get a bounce basically between like 518 to 520. Looking at IWM on the 4-hour, twice now, IWM has broken below the lower support line of this ascending channel here in yellow, both here and here. And this time around, it didn't even reach the upper resistance line of the channel. The first time, it broke the main support line of this much wider ascending channel here in orange, broke below about 217, but this demand zone held up, and the last time the support line held up around 219. And I love technical patterns because when we zoom in on the 2-hour time frame, we can see this very clearly defined rising wedge pattern that was targeting about 225 to the downside. And we can see now we're forming this falling wedge pattern, which is actually targeting about 229.50 to the upside. So in other words, we could basically see this pattern play out here and then reverse course right back into this supply zone. But please keep in mind that this entire shaded green area from about 226.75 all the way up to about 232.50, it's all supply, and it's likely to keep pushing price down until it's broken. And this $233 level, basically 233 even, is a key level, and it really has to be broken above for any further continuation upward. Looking at the 4-hour time frame on TLT for long bonds, I have to wonder, are we witnessing a bullish inverted head and shoulders pattern here with the neckline here in light blue? If we take a measured move from the neckline to the head, essentially, and we drag it over here, we can see that this would be targeting about 92.25 to the upside, which also is complement with this key level right here. Keep in mind that we are at the upper resistance line of this longer term descending channel in light green, so it's really make or break. That we can see that we had these two rising wedge patterns that formed back to back, neither of which played out completely, which does show that the market is bullish on bonds, and we may see longer term yields continue to fall, and this could be tailwinds for equities. But it could also be a sign that the market is pricing in the possibility of deflation instead of inflation. And we can't rule out the market trying to price in increasing inflation if a bunch of Trump's tariffs actually go through, though. And quickly zooming out on the daily time frame, I just want to show you the significance of this descending resistance line here in purple. You know, you could argue where it starts from, but it looks like it basically starts around March of 2023. And every time that we've hit it, we've bounced off pretty sharply. We broke out a little bit and then came back underneath it again. So there's the convergence of a lot of key levels right in this basically $89 level. If resistance holds up here, we may see TLT head back down to retest this key level around 88. And keep in mind that the lower support line of this channel is all the way back down around 82.50, which also lines up perfectly with another key level. If we get back down there, I would absolutely be interested in longer dated or leaps calls on TLT, as long as support held. Looking at Dixie, the dollar strength index on the 2-hour time frame, we can see where we double bottomed around 107.60 between Thursday and Friday, February 6th and 7th, and it has to push and stay above the 200 simple moving average here right around 108.20, where you can see that a lot of other moving averages, the 50 and the 100, are also basically converging all in that same level. When we throw up all indicators, we can see that Dixie hit this Ichimoku cloud support on the daily time frame near the lower Bollinger Band right here, basically right around 107.30. And it's likely to at least retest this baseline of the Ichimoku cloud around 108.58. And if it can get back above, it may even retest the supply zone or even this recent high just above 110, which also happens to be near the upper Bollinger Band here. And just quickly looking at a slightly cleaner chart on the weekly time frame, if we look at the RSI, we look here, we can see that the RSI has made a lower low, whereas price here has actually made a higher low. That's something known as hidden bullish divergence, and on a weekly time frame when we see that, it's very likely to see a strong bounce on Dixie, potentially followed by further continuation to the downside. Looking at VIX on the 1 hour, just like I shared in my last video, you have to watch for the break of these descending resistance lines on the VIX. I usually use blue for resistance, kind of like you have to break through the sky. And you've got to break these if you want to be able to predict breakouts in volatility. We broke above this horizontal resistance line and descending resistance line right around 1540, and it could be headed higher. On the daily time frame, both the 50 and the 200 simple moving average are both converging around 1625. And either it's going to hold as resistance, or if we break and hold above, the VIX may switch trends to bullish. And the 100 simple moving average here in blue is around 1720, so we would have to get above that for continuation up. And there is this descending resistance line as well, so we would have to break that probably somewhere around 1840 to 1850. On a 15-minute time frame, we've either got a rising wedge or an ascending triangle. If this breaks to the upside, we would be targeting a VIX of about 18, or if it breaks to the downside, it would be going down to about 15. Either way, it would be putting us above or below some key levels. On the 1 hour time frame for the ADD, the market breadth indicator, this descending channel here in blue still appears to be holding up, although we did have a couple of breakouts here and here. Even then, as you can see, as we broke down below resistance and tried to come back up and retest it, it still acted as a resistance. You can see the wick here, it was still acting as resistance. We got above, it acted as support, so it still at least does seem to be intact for now. If the market actually decides to go below this key level of minus 2,000, the channel support is down about below negative 2,500, which would represent a very bearish market. And I've previously pointed out these key support and resistance lines on the daily time frame, and so far they still appear to be holding significance. And this symmetrical triangle is still targeting the end of February or early March. And if you know what event could lead to a major breakout or breakdown on the markets around that time, please leave a comment down below. And if this lower support line holds up, well, the upper resistance line is back above plus 1,200. So I'm very curious how this pattern breaks because multi-week patterns hold a lot of significance. And I gotta say, in just the past 24 hours, I've gained an additional 100 subscribers, and I appreciate everyone so much. I'm still working towards my goal of at least 1,000 subscribers by my birthday in April, so if you can help me out with that, I would really appreciate it, and I'll continue to provide solid market analysis to the best of my abilities. And I'm about to release this week's trading rule to live by, but I just want to wish everyone the best of luck, cool cats, and God bless.